right here. Hold on, let me see. Da, 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 da. Okay, right here. Let me just take this, drag this across. Um, Here, just in case we end up violating that S&D responsible, and then see any reaction up above it. Because there are times where we do violate that and still trade higher. So you need to know what we're tapping into. Remember, everything on the 1 minute is subject to be broken. Everything on 1 minute. So you need to know what's going on a higher time frame to stay afloat, keep that bias that you or be able to maintain that bias that you have. So there's those lows that were ripped up now. Now, we'll see where we go with this. Nice little news candle here that opened up, ran the low. No, I think actually this took the high first, then ran the low, and then traded up above to this high here. And then we began dropping below that. So the this news candle, when it opened, it stretched up, took out the
efficiency,
high,
which is
stretched below, took out these lows, and this is where we've been, since that happened. So just pretty much waiting, see what happens in the retail cemetery, and we'll move forward from there. There's never any rush to want to trade any of this, especially if you know that ranges get tighter and smaller. Stops are allowed in those kind of environments. You want to wait for that. I get it. Most people want that like huge push, that the market opens up with. That's just not something that should be your goal in trading. Trading should be that you understand what's happening at all times so you could avoid being what? Margin call. So you could avoid what? Losing your capital. The very first objective in trading is capital preservation. And how do you preserve capital? The same way you preserve your account when you're outside, right? Y'all go outside and just run in front of traffic? No, no. Y'all don't want to be margin called in life, right? So what do? You protect your life, right? You don't live every day like it's your last. You protect it so it doesn't end up being your last, right? So we got to approach trading that same way too. Um, Let me actually turn on the recorder since I cleared up a lot of space on my hard drive. Um, this might end up being a banger today. I don't know. Might end up being random. I don't know what today's gonna hold. We'll just hit this recording button here, and here we go. Good morning to everyone that said good morning, and to those who didn't, learn to have some manners. You don't come in like I went to sleep with you last night, because I didn't. So good morning to everybody that's here. Yes, I was seeing that as well. Zika, I was seeing that as well. Dave, you should put the advanced market structure videos 1 and 2. So the advanced market structure is a part of the rest of the curriculum that's there. Um, I tell people that it's things that they have to watch, like period. All of it is important. I say all of it is important. I said watch the playlist 10 times. Watch the playlist 10 times, the free playlist. Watch that 10 times. A lot of people in here is like 10. Well, hush. I ain't been through it 10 times yet. You know, you probably got a few people that been through it 10 times. And probably even more, probably like 20, 30 times. But I tell people watch the playlist 10 times. 10 times. And then you move to the rest of the material. And you still have to watch that 10 times as well. Because it's really going to help things to stick in your brain. It's really going to help it stick. It's priming. It's priming. A lot of us, the reason why we remember certain jingles, you know, with commercials in our childhood is simply because we've seen it so many times. We've seen those commercials play time and time and time and time again to the point where the minute we hear the jingle, guess what? We could just hear the beginning of it. We could finish the rest of the sentence. We could finish the rest of the song because we've been primed so much that we can just see a small portion of it and it takes us back to the whole thing. Now, granted, that commercial does nothing to help us in our daily lives. Nothing at all to help us in our daily lives. But our brain still retains it and allows us to recall that information the minute something even so much as looks like it or sounds like it. So I'm using that same approach to tell people, hey, you got to watch this stuff at minimum, 10 times. At minimum, 10 times. So guess what? If it's a 2-hour video, that means that at minimum, you got to spend 20 hours watching that. If it's a 2-hour video, you got to spend 20 hours watching that one video. And mind you, we said minimum. Minimum 20 hours. Very important. You know, so those are in the instructions. And I tell people that the beginning of profitability comes first with following instructions. Period. Nothing else. Nothing else at all. It comes with following instructions. So those who will follow instructions will last. And those who do not follow instructions will see that success will be short-lived. Success literally comes from a routine. I told you about that yesterday, about creating a routine life around this. Told you all about that. Some people are like, oh, I'm going to take a day off because yesterday, you know, it was a hard day for me. Oh, that's the way life works, right? This is the way y'all ever had a hard day at work and y'all took the next day off because y'all had a hard day? And then what y'all do? The day after it was a hard day and y'all took the following day off? No, I don't think so. You show right back up to work, right? Same approach. It's just you need to understand that, you know, you need to place some value on yourself. More value than what you placed on somebody else's dream, somebody else's vision, somebody else's goal. Because when you're an employee, that's all you're doing. When you're paying rent to somebody, that's all you're doing. When you're doing anything for anyone else that requires some level of sacrifice coming out of you, that's all you're doing. You know? So you're absolutely correct, Ziga, and I hope people hear me on that. You know, I hope people hear me on that and not get offended by it, but understand that that's what it takes. That's what it takes. You got to think you're you're learning something from somebody who oh watch these swings, yo. You're learning something from somebody who took a shorter time to learn this than than a lot of people within this industry. Some people are learning it from me who've been in this industry for a longer period of time. We got what one, two, three. Wait. Just go from up here. We got one here. Well, this one took out these, so that invalidates these ones here. So that's the one there. That's the two there. Yeah, that's the four there. Okay, four. We got four already. Watch these swings. You see what I was saying about this being violated? Though we got a rejection inside of here that traded up. I don't know how much points that was. Eyeball it. 87 to 01. That's bad. I told you I watch because this can get violated and we trade down into something below it. Nice little candle there. We could stay like that, trade up above it, tap back in. So yes, very, very important that you guys follow those instructions. I mean, you ain't had no problem watching no the same movie you watched 10 times. You ain't got a problem, listening to the same song, 10 times. Now, granted, I hear some of y'all, granted, this song ain't 2 hours long. Movie may not be 40, 50 hours of material. But the movie ain't gonna take care of you either. So it's very important. Where are we in this? We're at the 70% of this swing down below here. We could potentially take this out. Yeah, drop back down into 760. So let's not be hasty for longs as it. Let it show you that it's long. It's gonna show you. Let it show you that it'll show you. I'm telling you. It's gonna show you. It's gonna be look at me. I'm going long. Look at me. It's gonna say that. So let it show you. It'll be the 50% of the daily fractal as well. But let it show you that it's. Don't be jumping into. Clearly, we still. What? Don't be trying to force it. I remember. This is near a structural low, so if it does trade away from it, we have some expectation that that's what price tends to do, trade away from that. It did come down and violate it. Oh, that's a nice one there. On a lower time frame. Let's see if we get that close. Oh, this is actually just a pattern. Little. Remember, this is market open. Relax. We just relax. We 6-7 minutes in. Just relax. Relax. There's a couple minutes in, so let's just bring it in. Bring it in. And just remember, as this, you know, in the event that this tries to make its way up, remember the pivot happened. Let me just move this out. This is where the pivot happened. Here. With this low here. 50% is where the pivot happened. So you can get a rejection back into somewhere here, you know, into there. Maybe you have a doji form or something like that with runs that low, taps back into something, trades up there like that. Sorry, let me wipe my eyes. Move this out the way for y'all eyes. The green arrows that I draw is retail pattern. That's the only reason why I draw them, because they end up looking like retail shapes. The little triangles, wedges, blah, blah, blah. Yeah, it's essentially how price prints. This is what we see after the fact. You see that, you know, like later on. We don't necessarily it could actually be like this. But we see that later on, you know. Doesn't necessarily have to exactly happen that way, but this is how price prints forward. This is how liquidity essentially is created. People end up on the wrong side of that. Yeah, we don't pay attention to that. What I'm showing you is this is a zone. I mentioned they would this is the pivot, so there would be a rejection from this here. You see how price traded below, came back to the pivot, rejected down from it. What was that? From 772 down to 752, rejected 20 points from this pivot here. I'm using this to show you guys that you pay attention to the zones that's in here, but eventually when we fill things out, you would later on see that it looks like the retail patterns that they're trading in past price. We're looking at how it forms in the future, and they're trading based on something that's already occurred. Off the 3. Hey. Yeah, that came right up in the, you took the candle, right? The fractal? Came right up into that. Bounced this way down. Yeah, it was a nice 20-point smack down there. Remember that this imbalance has already been tapped into up above. So usually when we get back into an imbalance that we've tapped into after we run a low. Yes, after breaking structure to the downside, oftentimes that just creates a retracement and then you feel the imbalance. And just like this is a pivot up here, there's also one down below here. This high, this low below, failed to put in that low. This is the high that sent it down. So this is essentially equal lows down here. It takes out this high up above. The reason for these lives is not necessarily for you to seek to take, entries on, but it's learning how price moves. Because you could look to take an entry and not learn anything. There's a lot of people, I told you last year, a lot of people used to make disgusting amounts of money, thousands of dollars, just following the little zones that I was drawing out. I took a week off and everybody blew their account. People had to go back to work, do all these different things. Why? Because you're so thirsty, wanting to know what's the next zone, where are we going, but you have no thirst for the knowledge of how that even occurred, why it occurred, what should I expect, where should I place an entry. You don't you essentially sabotage yourself. And that type of learning, there have been people who come here, have that same way of doing things. A lot of the questions people ask, it's already found in the playlist. It's already there. So some questions already show that people are literally shortcutting things. And I would hate for that to be any of y'all. People have already come and shown that type of work ethic, shown that type of behavior, and they quickly failed out of it. Quickly just, they're here 1 month, they're gone the next. Don't let that be you. You're saying the same thing as ICT with the learning of people. Yeah, it's disheartening, even as a teacher, for people to be so, like stuck on like what's next? Okay, what's next? What's coming out? Where should we get in? What? And you take a step back and they fall apart. Why would you want somebody to give you the fish they caught today rather than teach you how to get it tomorrow on your own? You're doing yourself a disservice, you know? I say that all the time, and it's, ring true. You're doing yourself a disservice. The whole reason why I even chose to do this for the month of July is just to show you that there's an everyday perspective in the market you can have. There are multiple opportunities every single day. There's no such thing as stay out of this. Don't trade that. You should not be in this. Wait until that. Some days you just may not see. You might be sitting on your hands for. There's no such thing as that. That's just for people who obviously are not there yet. They don't have that experience, you know. They don't have that experience. You think a NASCAR driver, just because there's traffic up ahead, he's like, "Hey, wait, we don't want, we don't want to. Let's hold on. There's no open road out there, so let's just sit and wait until things clear up a bit." Absolutely, absolutely not. So it's really all relative to the experience that people have. Some people don't have the experience to trade every day. Some people don't have the experience to watch markets do this and show you piece by piece. They they it's just the way things go. That's just the way it is. A new under the sun. Except first 15 minutes of open risky. Yes, yes, that's true. I will say that. Because you could have open shoot up like that and then start to consolidate and everybody think that it's gonna continue up and then you have a shoot down like that. So we've seen that plenty of times before. Um, but as I said, I pretty much from what I know, from what I've you know analyzed time and time and time again, is that you're gonna see these patterns, especially being in an area of interest to the left, and seeing exactly how it began to fold out. Immediately, I saw, okay, that little retail pattern is getting ready to create it. Even if we end up trading below it, coming back into it, and then trading down 70% of the factor, whatever it is, or we could trade up above it, come back up onto it, head up to here, whatever, and drop back down. There's a ton of stuff that could happen, a ton of different ways to, but you need to be able to read the narrative, know what's getting ready to occur, so you don't get clapped up in it. You know how many people jump into a sell right here because they're like, "Oh yeah, it's gonna take out drawdown." Either jump into a buy there. They in drawdown. People jump into a sell somewhere down here, maybe even here, and they just sitting up here in drawdown, hoping that it actually. Or what some people do is they end up cutting here after they chase this, they cut up here, and then they try to chase a buy, and then they end up down here. Man, not giving any highs or lows here. Y'all see this? No closures below, no closures above, nothing. There are times where you can't necessarily rely, um, market structure. So there you go, drop down. Like I said, there's this 70% that's down here that it could seek to drop to. I think more or less 713. Oh, what am I doing? Right there. Of course, lest we get the flipping structure above, but I like that down there. Now, see, even though this pattern occurred here, even though this pattern occurred here, um, that happened here, you could have a larger one taking place somewhere through here. A larger one getting ready to range. A larger one like that after something happens like this. It could also wick below this, go back up like that. But you got to be able to, well, for you guys, you should just stick to zones. Like obviously I'm incorporating zones here. You know, the zone is the start of it. You have to be able to find zone. So obviously this little drawing that I'm doing showing how these patterns fill out, there's zones here as a reason, sorry, for why I even think or believe that something like this is going to happen. I'm using a zone to time that, but I've seen it so many times before that, I could essentially rely on my memory for that. All pairs just ran 100 pips against JPY in 5 minutes. I think that's more than likely because of the news. You got to remember that Japan is the largest bondholder for the United States bonds, the United States debt. So if the United States continues to hike rates, then you'll end up seeing uh, you end up seeing those bonds get devalued essentially, and in the event that Japan wants to sell out of them, they'll be selling out at a loss. So they literally print money to buy debt. So with these news events, those Japan pairs will go haywire because they're essentially, pegged to whatever it is that the dollar is set out to do. Because they hold most of the debt. Look at oil. Hey, whoa. Hey, yo. I think I was looking at this earlier. Yeah, what was I looking at on this earlier? Looking at something. Um, it was this and something else. I think it was the dollar. I was saying that it looked like it flipped. Yeah, yeah, yeah. Yeah, it was the dollar. Yeah, I was expecting a rejection back here along this. but then you see the little flip that occurred in here. Dug in, swiped that low, then traded up above. And YM, G's and P's, whoa. So I was expecting YM to do this, not all of this up here in this one shot. But for last night, I was expecting YM to do this. Tap into this area down below. I drew this out. I think this was right after spread hour. It might was it? Yeah. So I drew that we would trade up, then trade down below whatever low we, and then trade back up into this zone here. Trade back up into something within here. It was reject out of here. Trade down after into here. And then bounce off of here to go up. So I didn't expect it to do all of this now straight off of it, but you know, YM clearly is
Order
on
filled.
the move. And remember what I told y'all about the weekly? Remember like 2 weeks ago I said that YM was going to take this weekly high? And I said there was only one reason why I expected it to take the weekly high. Y'all remember that? I said there was only one reason why I expected YM to run this week. And I said it was because of this hidden S&D that was back here. So I said within this, a lot of people hate to see this, can't trade it, have no idea what's going on, all different conclusions out of it. But the reason why I knew it was going to take out this high was simply because what was there, what was present. But that's nice that we end up taking it. Everybody that in
Order
was
filled.
bearish on YM. Why? I don't know.
Stop filled.
Probably because they can't read higher time frame on candlestick structure. And guys, the stuff that the stuff that I'm literally doing is the stuff in the playlist. It's all there. Like, you know, you hear people come in the group and talk about how they develop swing strategies on it and stuff like that. It's all there. Yeah, it's all there. Look at this struggling happening in here. These wicks. They're probably selling out of their positions and going into YM. Look at this. Look at how far this margin is. This dropped 80 something points. This flew 180 something. So ES probably look garbage right now. Oh well, it's not so bad. ES ain't so bad. Yeah, ES ain't so bad. It's not so bad. Everybody and their mother's short on this as well, but ES is they ain't doing so bad. I guess those bank earnings are really driving it. Oof, look like this get ready to follow the herd, huh? Here. That'll be the demand that was formed below. Hopefully it maintains this imbalance. On the closure of this, because then you could have price tap into the imbalance. Deliver that. Or at times you get like another candle go up. This. Go up like this. And then drop below into it like that. And then swing out like that. Uh, let's see. You you were taking a you were taking a buy. You were taking a sell. What time frame is that? My order filled above on the high. That might have been a spread issue though. I know with Top Step, a lot of people have been having issues with Top Step. Um, no, sorry, not Top Step. Tradeovate. I'm talking about Top Step. Tradeovate. Tradeovate is the platform that is the broker that they use. So Tradeovate does that as well. But you ended up in profit, right? That's all that matters. Yeah. That's all that matters. You would take a little break, take a little break, This take a little break because you got a free, yeah, exactly. It's free 99. You get a free break, you take a little break. Woo! Because they're gonna try and catch you on the next one. So you want it. Ah. So we still didn't take this high right here, this the highest point here, but we did take this little ins. We just didn't take this highest point here. So just be careful of that. Yeah. That's like that one time Henkel trade was the numbers were delayed from what I was looking at and what they were actually doing. I'm like, hold up. Something is wrong because they're moving slow and this is moving fairly quickly and I'm ahead of it by like a couple seconds. So see for me I thought we would reject from here. So I had this drawn out here. But look like we went up above it, did not take the high, rejected from there. So watch. Doo, doo, doo. This is a little hidden S&D in here. Let me just move this out the way. Yeah, so I've been hearing people talk about that uh recently, Henko trade holding you in the trade. Um, especially around news time and stuff like that too. And that's what I tell people: don't trade around news because you never know what these people be doing. Go listen to me. What do I know? You know. But Hango Trade has been doing that lately. Um, I don't know about indices, but it was with forex. Just zoom out, so y'all, so yeah, the best way to trade is zoomed out. Let's check some of these charts here. Charles over here killing it. And Sergio. Okay. Biden administration has announced a voluntary U.S. cyber trust mark program set to launch 2024 to enhance cybersecurity of smart devices to help to help consumers identify trustworthy products. Yeah, okay. Whether Biden announced that, whether Trump announced that, whether Bush announced that, whether Obama announced that, we all know that anytime America announced anything, it is for control. Okay? We will keep that nice, short, and sweet. It's a nice little bounce off the I guess maybe it was like this. Maybe it was like that. We didn't get we didn't get the one from down there though. A little surprised about that. Maybe what to do is it go like that and then fall back down like into here, and then trade its way back up to there, because then maybe it's creating now the larger one, kind of like that. Maybe it'll do that. Everybody talking about reject CBDCs. They melt central bank digital currencies. You ain't got no choice. You ain't got no choice. You think when you send a wire transfer, you have control of what they're using to send it? No, don't use the clearinghouse for the wire transfer. I don't even want that. I don't want to be a part. Make sure you use. You ain't got no choice. You ain't even gonna know that they're using that. It's up to banks to facilitate the payments with those things. It ain't. You still gonna get your little dollars. You little paper money. You still take that out at the ATM. But when you sending that bad boy, please, you ain't got no control over that. Did you reject the automatic clearinghouse payments? No. No, you did not. So what makes you think you have control of it? Go back to cash under the bed and hope your house don't catch on fire by some electrical problem, because clearly things aren't so regulated in that sense. Have an electrical fire and lose your life savings underneath the bed. If you ain't doing nothing illegal, you ain't got no choice. This is what they do. They don't ask. You ain't got no choice. Move this out the way. So if you look, you see why trend lines works. You look at the slope of this. There, there, there. You see why they work sometimes. and everybody's like, oh, a third touch validates a trend line or whatever it is. Yeah, I think it's. But prior to that, if you look here, what's my colors? Prior to that, if you look here, you had this one too. So you see how people who are trading trend lines, you got that one there, you got that little touch there, you got that one there. You see how people trading those, there's a possibility of them being able to, be successful with, watch these equal highs. There's a possibility of them being successful with, being able to utilize things like this at times. But when it becomes subjective to, oh no, maybe I got to move it here. No, maybe I got to move it there. Maybe I got to move it over. No, maybe it's this one up here. Maybe it's when it gets to, maybe it's this one. Maybe it's this trend line. Maybe we're waiting on this to hit. Maybe it's this one right here. This one up here. Maybe it's that one. Like, you see how it essentially starts to get, a little difficult to follow, on the 1 minute, and the same stuff that happens on the 1 minute happens time frame. So though they used the trend line and it got tapped the second time here, or it got tapped the second time here, or it got tapped the second time here, when price breaks above that and they're looking to enter on the one that is breaking up above, they might be entering on an hourly, trend line that's not going to hold. If they traded on 1 minute, they see how much times it does not hold. The amount of times it does not hold at all. And that should be enough to say, hey, I'm not going to use trend lines to trade with, because based on the data that I've collected on the 1 minute, it only works a number of times, as well as it can be subjective to whatever it is that's happening at the current time. Like this one here, they would call this a break and retest here. Broke up above it, you retest the trend line down here. This would be a break and retest to them. Break up above this. Let me just change the color. Action purposes. They break above this yellow trend line. They get in on the retest of it, and they look to take it, wherever it is. And in the event that whatever just above the trend line doesn't hold, they end up getting wrecked. So trend line trading, there's no, although I found success in it, it was something that was very subjective, did not hold its weight and value. It was very stressful to hope that the touch of a line on a slope held and you somehow made money from it. It's a lot easier to identify what's happening here in order for me to say, yes, I'm going to take it. It's not the support and resistance, because that becomes very subjective too. Mm. You see these guys on this trend line here, let's say this is on the hourly time frame, these guys on this trend line here would end up being in all of this, consolidation here, hoping that this holds and runs back down to the low down here, or some little, support and resistance area through here, because most people that use trend lines to trade with, they also pair it with. But you see these wicks held bottom side and just made its way around. Is that high taken out just now? Right there. And then the whole break of the trend line thing, break above the trend line, retest and go. Let's say it ends up dropping down into this slope that it's creating here. Then they end up getting clapped up here because they saw a break above, not what price was doing. So you got to be very careful with those things. At least, I guess I could see a lot of it because now I just use zones. And now I see why they think the way that they think, why they believe it works, why it works sometimes and other times it doesn't. This is tapping at 30% of the zone after breaking up high right here. So that's what action. Yikes. Someone on Twitter shared, they said they ended the day in 100% loss on both accounts. It looks like they lost accounts. And the reason why, you guys want to hear this. You guys want to hear this. The reason why is because they said didn't realize ES and NQ were doing different things this morning. This is exactly why I preach against, with the power bestowed to me, correlating. It's very important that you don't correlate at all. You don't. You just trade what's on your chart, and you don't correlate anything else. You're not correlating dollar with nothing. You're not correlating indices with currencies. You're not correlating one indice with the next indice. You see how getting, obviously it was looking crazy because one index is going that way, the other index go to ES chart. While NQ is down in the dumps here. You do not correlate at all under any circumstance. I don't care if the dollar has went down and indices went up in the past. I don't care if, the dollar went up and indices went down in whatever time that whatever happened. Do not care about that. I know that some people, their former mentors, the people they learned under, told them that that's something that they should pay attention. No. The answer is no. It's not. It's learn to trade what's on your chart. Your chart. Hey, look at that. I was looking at that too, Luke. I was looking at that too. I can't be giving out all the answers. Somebody gotta pick it up on their own. I do it every day, But I was looking at that too. Now you see why I had price trading up above it right here. Up above it right here. And then back into the you're a bad boy, Luke. You're a bad boy. Yeah, that is mitigating this area multiple times. That's exactly what's happening. Mitigating this area multiple times. Usually when we get that little trade up above it, we see the drop back into it, So I told you I draw out these things correlated with everything that's happening that I teach, along with what, these concepts that have been here for so long, along with what they tend to show, what people tend to be tripped up on, or what people take trades on, believing that, yeah, wedge patterns work. I'm telling you. Yeah, there's people that make money on some of that stuff, given that the pattern works out. But it's not something you can rely on the lower time frame. But yeah, I had that. Even though we would trade up above this, we would trade back into this range. And it would essentially just supply another tap onto this little slope down here. They end up calling it like a false breakout. You see why these trend lines are not reliable. I couldn't decide if it was the upper or lower that was multiplication. Oh, this one here. So this one would act as the same one. Actually, not even necessarily. It would be here. This one would act as the same thing. And this here. So this tells people when we get into these areas, you should not be holding a short to drop all the way down here, because the targets are above these, because they mitigate already. You see this trend line break above and retest. That would smoke them. They would have failed. Then they would drag this over here and be like, oh no, wait, it's this one here. This was how could I? And I'm saying that because that was me. I'm not joking on any of y'all. If y'all use trend line, that was me. Me that, was using it like that. Trying to solve these patterns, telling people, yeah, you can get an indicator that the indicator could show when the pattern forms. Little beginner's luck taking over and whatnot. So even though I had this from here to here to here, back up to something, like here or whatever, what you want to pay most attention to is where does these points line up in terms of structure? Not necessarily these things here, these lines, trend lines or patterns or whatever. It's not necessarily that, but what does it line up with? The points, the pivot points that I'm drawing in the drawings. Your job is to look at what it correlate with to the left. And if you see that it correlates with something to the left, pay attention to those zones that are there. These are the areas that it taps and touches and turns and moves from these specific areas. So you'll see that the sooner you get in your playbook, y'all listening to me? The sooner you get in your playbook, no zone, no trade, that would begin to open up things for you. It would begin to open up your understanding of what's actually happening in the market. You only get in at a zone, because then you'd be able to see a lot of the same stuff that I show you guys here. This is literally just price bouncing between these different zones. That's how we move. That's how the market moves. In these different pockets of areas, there's some that we mitigate multiple times. There's some that we drop into. You want to see us swipe something above or below, then you see a strong move, from out of wherever. Why do you think I was forecasting this one here? Let me just change the color on this. This one here trading up here. Not because I think that, it got to listen to me, it has to do, but because what it lines up with. There's a low here that put in this high right here. So if we run out any of the lows that are here, that should be enough coming out of this zone to give us an exasperated move off of it. There's a reason behind all of these areas, a reason behind why they act the way they do. There's logic behind it. So your understanding will begin to grow. Fly. Your understanding will begin to grow. The faster you apply only trading in a zone, only trading in a zone. Now you want to watch these highs up here, because being that this gave multiple highs through here, we just make that a different color, maybe yellow. This could very well end up violating this low too, because these are multiple highs or equal highs, not from this time frame. These are equal highs from another time. So you want to be mindful of this. The narrative of everything that's happening. You just want to be mindful of that. And here go the support and resistance trend line trading bros, just stretching out all the different trend lines about here. Take a low. Oh, there's another pattern forming here too. I know all of this looks crazy, y'all. This is the way price moves. This is how they do it. This is the way that price moves. Everything essentially becomes something identified, some pattern that we've learned first got introduced to trading. Everything, all of it, it becomes identifiable with something that we learned along the way. And we end up thinking that it's this, then it's not. Sometimes we're right, a lot of the times we're those things primed us a lot in the beginning, and that's why it's hard to unsee it. This is probably Pro Charge's inverse head and shoulders, right? There go your head and then go your shoulder there. And the neckline break. Is there. Going across there. All of that stuff can be found inside of this. There's a little wedge pattern forming in here. That there. Let me put another color on it. Go with pink. There's your little wedge pattern in there. All of this stuff you see. So you see double bottoms, double tops, head and shoulders above, inverse head and shoulders below, wedge patterns, triangle patterns. You got your little, what do they call this again? Call this the megaphone. Megaphone. You got your channel. You got your rising wedge triangles or whatever. You got all that stuff in there that's happening in a range. Is making you go from either bullish to bearish, whatever it is. And the safest place for you to trade in is literally a zone. Oh, can't forget the trend lines too. Dude. That's where you're going to find the most success. Hey, whoa, my eyes. Wow, that almost blinded me. Is that a 3-minute chart? Oh my gosh. Goodness. Almost lost my vision from that. Jeez. I'm kidding. I do not be looking up at. Now the concepts still work on, but this I tweeted earlier today. Everything above M1 is sleeping bag time. Yeah. Oh, I mean, I guess 3-minute zones hold a little better, hold a little stronger. You know, I guess that would make sense if you're selecting zones. But you have to understand that you can get a double bottom, triple bottom. You can get, all types of things in that zone. You could even get a run of the low on a higher time frame zone, but we just wick below it and then trade up above it. So you want to be careful of that because you can select the zone from a higher time frame and price trades below that zone or above that zone, but only wicks through it and then goes exactly where it is that you're expecting. So you just want to be careful. Yeah, they tend to hold a lot better. I guess the only issue with that is if I was taking a 3 minute zone, like something down here, 5 minutes here, then I would be missing a lot of what's actually happening, up here. You see how Luke had mentioned we were mitigating this area multiple times, so if my zone is down here and I'm looking into a trade down here, I would be eyeing this and placing bets on something like this happening without even considering what's happening up above it because I'm eyeing the fact that that's the zone that, I want to see something happening. So that's why I left the higher time frames. I used to trade on the 5 minute and 50 minute before I learned the 1 minute. I used to trade on those higher time frames. And, that quickly let me know that a higher time frame bullish candle can turn into a bearish candle. A higher time frame bearish candle can turn into a bullish candle. And you miss the detail of like how all of that is even occurring because you're focused on whatever that higher time frame candle is doing. So that used to trip me up a lot, especially at market open. Trade market. And you see a 15-minute candle going up and you go and want to jump right into it, and that same 15-minute candle 2 minutes later turn right into a bearish candle heading all the way down. Woo! Those were the days I'm talking about. Who likes losing money? Woo! 1, 2, 3, let's lose money. Oh man. So yeah, you see how you got all of this stuff that's in here? You got the break of that little rising wedge. You got the retest of it. And then the short after the retest of it. You got the other, wedge here that was just created. And we're breaking up above that wedge now. Like there's a ton of things that you could essentially see. Only the loan people coming around. So let me myself coordinate. Look like they sound like they drove away. Okay. Um, yeah. Yeah, so see that this move right here, exactly on your chart that you showed, was coming out of the 3 minute down candle, through here. Or this is probably even wick maybe or something. Yeah, 5 minute wick. 3 minute down candle, 5 minute wick, coming out of a higher time area. With this here, this is essentially what I've talked to you guys about in the past of on the 1 minute trading up above the previous candle. Look at this. We stab inside, we trade up above that previous candle, and we close right here. We make our way back to the candle, and then you see a move heading out of it. But this is also the 50% tap of this zone here. Where does this zone come from? This zone comes from a higher time frame, 15 minutes, that 10 minutes, maybe, I don't know. But this zone is obviously good to use, with that 50% tap, but not understanding this stuff in here can, cause you to end up being on the wrong side of the market. Should this zone not hold, should this larger zone not hold, you have to know what's happening in here, not just at the 50% of it, but there's sometimes where price just falls straight through zone, or just trades right above it. You guys see, so I particularly like the 1 minute because it's at least, whether we're in a higher time, at least teaching me the order flow that happens around the zone that I'm utilizing. So I mentioned to y'all this was the run of this high up above here. And you see, based on here, we drop into the 50% of it. So we first react at the 30 here, then we drop into the 50 here. And then we trade above off the 50 back out of the zone. This is why I said don't do one-to-one. A one-to-one essentially is just your stop loss behind the zone and trading out of the zone. So one-to-one truly is nothing, because you can get a one-to-one just trading with a zone. Taps right in the zone, heads right out of the zone. Like this here. A one-to-one is tapping into the 50% of the zone, stop behind it, and trading out of it. All right, so here's us coming on another tap of this zone here. Anytime I hear screaming in my backyard, I'm like, who is being killed? Then I remember as kids. Right behind my backyard is like a forest trail or something like that, tree trail. I don't know what it is. But there's a school on the other side. So Pro Judge, remember the larger one that we talked about? There? See, we trade below it, tap here, and we look right across it, tap there too. Took profit, supposed to trail, but we way beyond 5 points. Yeah. Listen, I'm telling you that the whole 5 point measure, it's because a lot of you want to trade with funded accounts. Funded accounts, they have trailing drawdown. You can hit your trailing drawdown trying to hold more. You can hit your trailing drawdown trying to hold more, especially it coming back to break even to your entry. It's best practice. It's best practice. If you're trading your own account, you can trade whatever way you find. It's your own account. But if you think you're going to trade a funded account trying to hold on to profit, and hoping that it gets up above a certain thing and you trailing it behind the lows, when it comes back to take you out, even if it takes you out in profit, you still lose your account. So I'm literally teaching you guys a way to both pass and maintain a funded account. If you want to trade with those big lots and you want to just take one trade a week and you want to make thousands of dollars within a day and all that other stuff, I'm teaching you guys a method to pass that. If you're trading your own account, you're trading something else like a static funded account or whatever it is, then you can do all of this holding and praying, but it's for those who want to trade with size. Once you can hold on for forever. Once you up your size, watch how that eats you up. Yeah, Dave, that 50% tap. What are you talking about? This zone here? This 50% tap here? Right here? Anthony? So I think that what you're still seeing is the swing low, swing high, and then we trade into the 50% and then trade out of it. That's something that ICT does. I'm not utilizing that. So that's the, let me put it here. It looks exactly like it. That particular thing. So here's the swing low, here's the swing high. Then we trade back into the 50% of it, and then we trade out of it. That looks very similar to what I'm doing. It is the Fibonacci thing, and that's why a lot of people confuse the Fibonacci thing with where my entries usually line up. So I'm not using this swing low to this swing high, and we trade down into the 50 and go. What I'm actually using is the previous swing down like that into us trading back up above the high of that previous swing. So the zone I'm using is this high and this low below before we traded up above the high of it. So I'm expecting price to go back into the 50% of the zone and trade out of it like that. It looks very similar to swing low, swing high, tap back into the Fibonacci and go. It looks very similar to that, but it's also very different when you're actually applying it to these little levels here, like something small here, something happening back here. It's very different to that. So the ICT concept is the high, then you put in the low, and you go into the 50%, or even you go into or whatever comes out of it, and then you trade up there. I can see how people tend to confuse it with that, but what I'm using is the previous down move before we trade it back up above where that down move came from. This high here. It's actually what they call pivot points. So we have this up pivot, then we trade down into this down pivot, and when we break up above the previous pivot, you see us go back into the 50% of that zone, and we trade out of it. So there are times where when you're using the Fibonacci, it does not come back into percent, and it trades up. That's why people have this whole thing where, or at least even with ICT concepts, it can trade all the way up here and it could reach down and go past the 31, whatever, past the 50, past the 61.8, go past the 70 into like 80%. And guess what? Because the previous pivot was down here. So it came back into the previous pivot. And how do we know that it was coming back into this previous pivot? Because usually the S&D responsible for the break of structure to the top left, that gets violated, and then we trade all the way down into that pivot that was left behind, that origin that you hear us talk about. So it seems similar at times based on how price action fills itself out, but it's actually very different in terms of how it's traded, especially with when price action extends itself beyond that, but then comes all the way back just to touch that and then go again. So people are hoping that it comes back and touch the 50. They get into an entry on the 100, and then what happens if price runs that 100? They end up, in a loss from that. And they're doing that each time on every leg of a swing, hoping that price does that. Price comes back into the 50 and then takes them back up. And then a lot of the times, just see it go down, run that stop. It's because of that. So I'm teaching the details within the price action that's actually moving, seeing us go into the previous zone. We tap into the 50, and there are times where we tap into 30 of it, and then you see that coming out of it. So yeah, if you watch Intro to Market Structure, will tell you that it's the previous zone that we're waiting for a trade up above, or we're waiting for price to trade up above. And then you see us reach down into those levels that are given. And then from those levels, you'll see a confirmation within there. And within that confirmation, it can also leave behind a zone like that price can come down and touch into and head out like that. So yeah, it's very similar. I really do understand why people get tripped up on that. But it's the previous range that we're looking to trade back into, versus most people are looking for the swing low, they get the swing high, and they want to see price dip back into that. That's the Fibonacci trading versus previous range trading. So I hope that helped. Roger, look at that, baby. You see that rejection come out of right there? But we also understand the previous imbalance. If the previous imbalance had shifted a low, then most times when we trade back up into it, it creates a pullback. It's just a pullback, and then we get price to fill the rest of the imbalance as the continuation. So imagine on my funded account, I took an entry here and I was trailing my stop loss behind these lows. And imagine this went up like that, almost by 20 points. And then it came down by 20 points like that and took me out because I was trailing my lows. In the drawdown that I'm allowed on this account, now we're talking about trading with larger size, right? In the drawdown that I'm allowed on this account, I lose $2,000 from my drawdown without even losing that in a trade. I lose that from my drawdown because I held and I was trailing and I wanted more high to grand. Now let's say I left my stop down here and price does whatever through here and it ends up running these lows. Now I lose whatever profit I was supposed to lose along with whatever I was in profit on. I lose that, and it can come and take me out at break even here, but just because it came all the way down here from this stretch up above, I can lose the entire 5,000, 7,000, 10,000, whatever the drawdown is. I could lose that just because I was trading with 10 contracts and I still had the same mentality to hold on to price going to that high. So that's why I'm entirely against holding for longer than you should, because you're going to see that in the end, it's going to ruin your account. It's going to ruin you. You trading with these funded accounts, or you doing something on your personal account, that's different. If you're creating habits like that on a funded account that has trailing drawdown, you're going to blow your account. So I don't come out here every day to say that for my health. I say that because I know that's what it's going to end up in. You continue to do that, you're going to blow your account. And that's greed that's making you go against that, knowing that this is something that happens. This is something that happens with an account size like that. So I just want to put that out there for anybody trading a funded account. You're going to blow your account with that mentality. Now, if you're trading with two minis, one mini, that may not matter. You're just increasing your chances to lose your account over a long period of time. It's just not something you want to get used to. I get it. Everybody wants more profit. You need to know what you're trading with, though. Everybody wants more profit. I completely understand that. I completely understand why. But if you don't understand the account you're trading with, since I knew that most people are trading with funded accounts, and I know that these are the parameters within the funded account, since I know that, I'm warning you guys that if you trade that way, you're going to lose it. It's not to tell y'all that y'all can't take more profit. Oh, you shouldn't be taking 100 points now. You know, like, no, you can take 100 points. You just have to know what you're trading with. Go in there, can't tell, been there, how to get there. Go in there, cannot tell, been there, how to get there. When some of y'all lose your accounts and y'all accounts are way in profit and y'all go and lose that account because of that greed, you're going to see why. I'm going to ask you to open up show me your P&L, and I'll read why you lost your account, and then I'll see exactly why you lost it. And I won't have anything to say. You lost your account because of greed. Now it's different if you're on a PA account now, you've passed your challenge and you're well in profit. That's different. It stops trailing you after your account gets to a certain amount. And now, like, let's say you took $100,000 account. Now you're, I don't know, like 3,000-4,000 in profit. And then you balloon up to like 10,000-15,000 in profit. That's a little different now, because you lose the account if it comes all the way back to 1,100. It comes all the way back to $100,100. You lose the account if it comes all the way back to $100,100. So that's different when you're on a performance account. When you are taking a challenge, you are developing bad habits to take that challenge. So look, Anthony, when we trade up above this, you see we put in this high, we put in this low. When we trade up above this high right here, now this becomes the zone. We trade up above it and we expect us to come back inside of it. That's the zone. Now, granted, there are other zones in here, but these are based on candlestick. We put in this low. This is the high that it came from. So that's a zone there. There's a larger zone on a larger time frame here. And this is the initial high that put in this low. So that becomes a zone 2. All of this stuff here, there's zones within zones within zones. There's even a zone inside of here. From this high here to this low here, this is a zone 2. So it all corresponds with different time frames. That's what I mentioned in the back testing section. It all corresponds with different time frames. So you have to know that there's zones within zones within zones within. That's the importance of watching Intro to Market Structure. Intro to Market Structure is not only showing you that you have this zone just below where price is at now, and you should just take a sell because there's a zone right up above you. No, it's letting you know that here's the larger picture, and here is the smaller picture where you currently are. But you would need to go to a higher time frame to see that picture, because at some point you're going to get jammed up. At least when we get all the way up above in higher prices, or when we get all the way deep down in lower prices. This is what ICT talks about with discount and premium and all that other. You know, you're not using those concepts to pair with what you're learning here. But if you are buying high within any industry, it's going to come back on you. It's going to come back on you. If you're selling low in any industry, you're going to see, you know, that it's going to burn you. That's across anything, not just with trading. So at some point, you have to know what is above you, whether it be 5 minute, 15 minute, hourly, or whatever it is. You have to know what's above you, but you can see what's above you on one time frame. You can see what's above you on one time frame. You do not need to go to a higher time frame. Anytime you have to go to a higher time frame is because you don't understand true fractal nature of price. If you understand the fractal nature of price, you see all of the zones that are already present on other time frames. You see it on this one time frame. But you haven't spent enough time in the Intro to Market Structure course to really understand that, or even Advanced Market Structure. Intro to Market Structure, Advanced Market Structure, both of those things talk about the fractal nature of price. The problem is people go and learn from those videos one time and they're like, and then they get smoked. I said 10 times, and I know when someone has not watched that 10 times, because if they do not understand the fractal nature of price, it's because they have not watched that enough. You can see every single time frame in one time frame alone. And you have not watched that video enough if you don't yet understand that concept. You would never need to go to another time frame, maybe for an imbalance or something like that, because it may not be from maybe for that. But outside of that, when you fully understand the fractal nature of price, you never need to leave the time frame that you're trading on, because you know what's both above you and below you. So I tell people to watch those videos 10 times. And unfortunately, the people who don't follow it, they don't get ahead. They have some success in trading, and then they end up spiraling out of control, and then they have a ton of losses after, and then they feel like they can't do this, and they judge themselves harshly. And it's literally because, no, you're not a bad trader. Y'all hear me say it all the time. You're not a bad trader. You're just bad at following instructions. You just want to do your own thing. You know, and if you feel like you're at that place, then you can mentor yourself. But you know, something got to give. Go in there, can't tell, been there. How to get there, and I'm always going to double down on that. 10 times. I know the benefit of it. You see other people understanding the benefit of it. It's reps, you know? Running my whole place back to the bench. Yeah. Yeah, but at least you know, sometimes I was there too. Listen, I was there too. Come on, I was there. I was there. You know, young little whippersnapper. Feel like, you know, I was ready to go. I'm ready to go. Let me in, coach. Put me in the game. I'm over here taking jump shots from half court. What are you doing? The guy's open down below. You taking back and forward. If you can make it, poor shot selection. Yeah. I was there. This is a long shot. I mean, a long shot. But if the 30 fails, do you think this is a possibility? Let's see. Oh, to take out all of that? Yeah, because it's all. Yeah. Yeah, because it's all mitigated already. So yeah, that's certainly possible. And Bro, so we moved that out there. So we moved that to the side because we understand how these things work, where we've been mitigating, what we've been tapping into, prices, moving itself from. And it's going to take you time to understand this if you don't understand the fractal nature of price. It's going to take you time to understand this. But what's happening here is actually that back here somewhere, there's a hidden S&D on a higher time frame back here. And a lot of people obviously don't yet know how to spot that as of yet. But there's a hidden S&D back here. So look at this, Bro George. Whoop-ink right there. Because we're talking about mitigating something multiple times, right? That's all the market is doing. That's all it's moving into is these different areas that continue to mitigate itself multiple times. That's all the market moves to. Now, what I'm showing you guys is a lot of preschool stuff, at least preschool for me, but it's very advanced for the regular trader. But here's what we mentioned earlier when Luke mentioned that we were tapping into. We said trade up above it, and then what? Trade back into it. Exactly what we said. Trade up above it, and then trade back into it. So all of these things are going on at the same time. Whether it gets there when you want it to or not, it all is still predestined to happen based on price, remembering and doing these things each and every day. Each and every day. Price is doing the same things over and over and over again. And if Chaz is here, which I'm sure he is because he knows that the sauce is important. What do we have here? This is the origin of this entire move down. It came from here, right here. You see this little tiny tap right here? This little, let me change the color. I don't know what, I'm running out of colors here. Let's see. No, I'm got red. Let me just, no, yellow might be. So look at here. We trade up like that. We shift down below, right? Look at what happens. We tap this right here. We don't even get into it. And we shift away and go down. Everything else was tapped. When we shifted away from here, what do we do? Trade back up, mitigate, 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 mitigate. This is all tapped into here. What was left behind? Here. We just tapped it by a small amount up there. And then what? You saw us have this huge shift away from it. So that's where we came from. That's where this entire market, in this breaking structure right here that sent the market down, this is all of it. All together. It's all there. It's all happening. It's just that you got to be able to build on those things. You got to build on those things. So you got to start with one thing. What is the one thing that I'm telling you guys to start with? Structure. 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 Y'all hear that? Structure. That's why it's very important. Everybody wants to get to where I am in terms of how I see the market, but nobody wants to sit time and time and time and time and time and time and time again without doing anything else but following structure. It literally starts there. I'm not no genius, no, I made a lot of mistakes in my life. I made a lot of mistakes in my life. But this is not something that, like, somebody has to be handpicked, selected, and anointed for the path. No, it's just your level of discipline. Your level of discipline is something that could either get you here quickly or cause a lot of bumps in the road that does not even need to be present. I know y'all, a lot of y'all ain't religious here. Children of Israel, they were only supposed to spend 2 weeks there. They end up there for 40 years. 2 weeks they were only supposed to spend in there. 2. Ain't want to listen. Ain't want to listen. Look at how hard things got for them. Some of them ain't making. A lot of them ain't making. Because what? You just don't want to listen. And the faster you admit, I don't know what I'm doing, I need to follow the instructions of someone that does know what. I don't know what I'm doing. I don't know what I'm doing. Be honest with yourself. I don't know what I'm doing. If I knew what I was doing, I would come here every day and have no problem. I wouldn't even be here at that if I knew what I was doing. But I don't. And you come to that realization, what is it that you do? What is it that you do? You follow the instructions of the person that you're trying to get to that level. Like I said, a lot of y'all here have been trading far longer than I even knew what a candlestick was. I told a lot of y'all, I started trading in December 2021. I became profitable with trend lines 2022 January. And the rest of everything that I found out was 4 months later. Like three or 4 months or so. I don't know. I don't really know. Because I buried my head into the charts and didn't look up until something changed. I don't know what the exact time it was, but I just know that I ran to YouTube and I was like, somebody got to learn this. This is crazy. This is happening every day. Somebody got to learn this. And some people have been trading far longer than, and people spend years and years and years and. Not saying that nobody, y'all ain't got the work ethic. Ain't nobody saying. A lot of you was disciplined and faithful. Full of faith, doing the same thing over and over and over and over. Full. Joining this, joining that, going here, going there, doing this, doing that, talking to people about this and that. Faithful. But something was missing. And for me, I was just like, I don't know, if I was a canvas, would I be oil? One of these. If it was me, I did not have anything but an empty cup. And anything that was bitter to me, I got rid of. Head and Shoulders, I told you I hated that after a while because I'm like, this doesn't even work. What are you talking about? I didn't have anything at all in there. So guess what? With an empty cup, you can fill it up with whatever it is that you want. Whatever it is that you want, you can place in an empty cup. So of course it might have been a little bit easier for me not having that garbage or quickly moving on from it. Quickly moving on from it, Not fighting with misery, quickly moving on from it. So I was able to skip the line. There's got to be something better than this. Usually that's always how an invention starts. But there had to be something better than this. For me, this, And I got it in this short period of time. And I'm literally showing y'all, look, it's right here. Look, this is it right here. All you got to do is this. I'm hearing people talk about funded accounts. I'm like, okay. Here's a way using, if my calculations are correct, and if the stars align and the moon expands and covers the waters, then here is how. Doing it for y'all. And even then, you still got people like, I know better. I know better. I know how to. Even then, I know what you're talking about, but I'm gonna. Okay. So you gotta bring yourself to a place of humility and receive from someone who is ahead of you. That's not to talk down or place myself higher than anybody. Any of y'all learn this, is put in the reps to learn this as much or even more than that? No, way more. Be able to get a lot further. Any of y'all. You put some kids around me? What? They be able to take this to infinity and beyond. Speaking of, Tao is just Jesus, Tao. What is happening there? That's up 369 points. Jeez, just moved another 160 something points and this only went up 40. Goodness. Hey. But yes, it's a matter of that. I get that. My personality might be hard for some people. Come on, pass. A little hard. But what I know, the work that I've put in, what I've studied, what I've spent time doing that a lot of people will not spend time doing. I'm literally giving you the shortcut to it. And I'm saying, this is the easiest way to get it. I'm telling you, I learned all of this because I wanted to teach my brother and one of my former friends this. And I just wanted them to sit still and do exactly what I was telling them to do, because that was the fastest way to success for them. Do exactly what I'm telling you to do. Just sit right here. Sit right here and look at what I'm saying. Put your phone away. Get off social media. Whatever it is you're doing, stop getting distracted by it and just sit here and do what it is that I'm doing. And guess what? That was so hard for them. That was so difficult for them. to just sit right here. Guys, you know how many people reaching out to me to do teaching and coming to teach their traders and you know, have access to millions of dollars in capital to you know, do whatever with in commodities. There's so many emails I get, you know, asking for these things, people writing to me on Twitter about it. I ain't working for none of them. Because at the end of the day, it's these big corporations that benefit from a lot of the chaotic stuff that goes on in society. Increasing their wealth. Ain't doing any of that. I don't have to be here every day. I don't have to be here every day. I put out a poll on YouTube asking the you know, progress was in July. Only 20% of the people who answered said they were profitable. Everybody else falling apart. You commenting on the YouTube page that probably got the most sauce known to mankind about this industry. You commenting on that page or voting on that page saying that, but the stuff is there. You can bring the horse to water. You hear them say that stuff all the time. Nothing new under the sun. The stuff is there. There's nothing else that you need. When I became profitable, that's it. All I have is the knowledge from video one. Guess? Can y'all take a guess of what was the number one thing that caused me to be profitable above everything else? Do y'all know what the number one thing was? I wasn't even drawing zones at the time. You know what the number one thing was? Structure. That's it. Nothing else. The same boring video people want to skip through. That was the only thing that saved me from going through eviction, that allowed me to put food on my table for my family again. The number one thing was just structure. That's it. That's all I used. Before there was this FVG craze that I found out about and all that other structure. Nothing else. Nothing else. And yes, if I'm being honest, prior to that, you're exactly correct, Yasin. Discipline. And that's why I always say discipline with the right information. You'll never hear me talk and not put with the right information involved. Because some people are disciplined. It would be a slap in the face to say that people are not. Some people are disciplined. But it's with the right information. That's what they're lacking. So yes, discipline. Yes, super important, discipline. And that's what changed it all, you know? That's what changed everything. Just discipline, nothing else. Discipline. So discipline and having that structure involved. Video one that I keep talking, and prior to video one, that's why I pushed there, because you still gotta. Because video one, I was showing y'all how we, break structure to the left side or to the top side, and then I was showing y'all how this is a larger break of structure on a higher time frame. So I bring people into the different types of structure that we have, and to bring people into that information. So I made that beginner's video because it's the beginning of looking into the way I see the market. Brought people into that. And I said, all you need is structure. You just need to know structure. You just need to know structure. You just need to know structure. And everybody's like, well, anytime I get into the market, here's what happens. And then the entry just goes against me. Well, what was the structure at the time? Crickets. That needs to be on your chart. Always. Always. That needs to be on your chart. And if you spend a day watching it, you'll understand that on the 1 minute, we create structure, break it, 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 create structure, break it. What are you going to start to see after that? What you're going to start to see after that is you're going to start understanding when structure is not broken. Even though it looks like it's broken, it's not. You're going to be able to understand what that looks like from a higher time frame perspective. And when you get that type of knowledge, that becomes a knowledge above college. And you can't pay for that other than with your time. There's no amount of money that you can pay for that knowledge other than your time. The most expensive thing you have that you cannot get back. You cannot ask for a refund. So why waste all of these hours doing all of these things? Y'all hear me yelling that on social media all the time. All of these hours doing all of these things other than what benefits your life. Guess what doesn't benefit your life? Social media. They don't care about you. Those people don't care nothing about you. I don't care who it is. Your cousin could be on. They don't care. Those people don't care nothing about you. I don't care how many times you say good morning. How many talking. They don't care. And guess what? When it's time for you to go in that cold ground, guess what? You going alone. And what are you leaving behind for your family? You gossip on the internet? That's it? That's all you leaving behind for them? Your jewelry that will become old in 20 years from now and maybe come back out when it's hot 100 years from now? They always rebranding everything and retro bringing this back. That's all you got to leave for them? So, I think that's very important for you guys to hear. I say it all the time. Go in there, cannot tell been there how to get there. And everybody that's here is trying to get to the place of consistency. Everybody in this building is trying to get to the place of consistency. Everybody. And how do you get to that place of it? You need to know what's happening first. When you first started driving a car, you wanted to be able to at least get in front of another car without them beeping at you or you crash into them or whatever it is. What did you continue to do? You learned every day that went by. You can just say, well, the driver will figure it out. I'm turning. Now, there's some people that still drive like that today, and I have no idea how they even got there. But obviously, you need to put in the time. The stuff is not going to serve you. Social media is going to do nothing for you when you're sick. When you have a loved one that's sick, it's not going to do anything for you. Give it up. Renounce and denounce it. Get it out of your life and come back reinvented. That's the biggest flex you could have, not knowing what's going on in the world. Please. You will stun on them, disappear, show back up again. And be like, yeah, I'm over here in Cabo. I'm sorry. All right, I gotta go. I gotta catch a. Or if you don't want to live that flat style, then at least you can live. And they say not to live above your means or whatever it is, but you can swipe without thinking about what's in your account. You can not like your neighbor next door, and it's like, all right, well, let's talk. You know, these people, who's dealing with this? Please. You know, like there's anything that you can do. That's the true freedom. Being able to do anything with your time. Not needing to ask permission from anyone for anything. Living life on your own terms. That's why we're all here. If we're being honest, that's what everybody's here for, to live life for that. Everyone is here for. There's not a soul in here that's not here for that. Yeah, your reason why, family, you know, all these other things that we, you know, say we want to work towards and do and all that other good stuff, which is amazing, is great to hear. But the truth is, we want to live life on our own terms. We want to take our life back. We want to take our time back, take our families back, all of that. And is your family worth that level of discipline? You literally got. I'm talking about them videos. You literally got gold right in front of you. I used to watch the market until I felt sick, until I wanted to puke, until I was tired. I was so sick and tired. Tired of being sick. Just, man, so disgusted looking at charts. And when I came back, everything was just brand new. It's like Picasso. I'm like, wait, hey, hold up, whoa. What? I'm a bad what? Not whoa. Listen, I know I joke a lot. Probably a sign of immaturity, but you know, it's the truth. I'm trying to get the truth across to y'all. That's why we're here. That's why we're here. Remember this hidden S&D from earlier? This news candle. That's why we're here. And I said eventually we're allowed to be looking to trade up above here. And that could end up having these highs in order too. And coming up to your yeah. But that's why we're here. You know when people short in this market? Oh, we ready to go short. Sort of imbalance open up. Whether it was in here, something like that. Right before 10 o'clock. Silver bullet. Yeah, the bullet came, but it was Just my dad's saying, sick and tired of being sick and tired. I mean, that was just the amount of time that I put in. Disgusting amount of time. No human interaction. No, nothing. Just charts and bed. 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 That's it. Nothing else. Charts and bed. That's all that it was charts and bed. That was my whole life. 16 hours a day. Charts and bed. Nothing else. I had nothing else that I was doing. I had a brand new PlayStation 5. You know, man, wasn't even playing it. Wasn't talking to anybody. Fell off the face of the earth. Nobody knew anything that was going on with me. My family, dead or alive. It was charts and bed. That's it. That's how bad I wanted it. And on the other side of that, you guys see the level of consistency where I'm at every single day. I was listening to a Twitter space earlier today. One of the guys called me you know, being honest, I don't win every day. You know, like, obviously, you know, it gets around, word gets around. Like, every day's a problem day. I'm not saying things than other people. Why? Because I put time with the right information. I wasn't going to take and corner myself within anybody's perspective other than what the market actually. And that's when I began to see all of these people are right. Elliott Wave had a portion of the algorithm. Wyckoff had a portion of the algorithm. ICT, Gann, all these different people, whoever it is that's out there. Al Brooks, Chris Laurie, all the people from everywhere under the existence of time, they all have a piece. They all have a piece of the algorithm. All of them. They all have a piece. That's why you have all these other concepts. Whether it's supporting, you know, the wedge patterns or whatever it is they want to call everybody, even if it was just somebody placing chart, everybody has a piece of what actually happens in this market. And that's what you guys see. And you can learn that too for yourself with exactly what it is that I don't teach you guys a strategy. I tell you guys take 10 points, get out, and then see what happens. Still sit there and watch the market. I'm not teaching you all the strategy. Oh, when price does this, here's where you get in and take that, and then you dump it, you good. I'm not teaching you that. I'm not giving you a strategy. You will find and develop a strategy on your own. You will find and you will develop a strategy on your own from this. Pro Jobs has way more than 10 points. On your own. You will be able to do that. But this is something that you need to get the foundational part of the way first. Hey, this is some stuff. I don't know. I thought they said after lunch is supposed to, because this is some movement here. What is going on here? This is how I know there can't be any news, doing this. What's this? Did they create a peace treaty and Ukraine and Russia is what is here?
Order filled.
Because what's that market thing?
Order filled.
Jeff
Stop
something?
filled.
Or Walter Bloomberg, maybe he got something I don't know.
Order Stop filled. Order filled.
Yeah, I can't. I don't know what that is, but I know we ain't short. It was a good assessment there, Luke. So yeah, we're gonna eat up all of this, because that's already mitigated. So we trade right up into this. Yeah. Is everybody that's saying stuff about, oh, this is the manipulation and then this and that, and guys, when you look back at it, the same thing I explained to Anthony. Here's the high. Here's the previous low. And we trade right into the 50% right here. Now, again, Anthony, it looks exactly like the thing from the ICT thing. It looks exactly like that. Maybe there might be an extra TE blah blah blah. Like, I don't know. It looks exactly like that. But if you look in well, in the premium section, Pro Charge, remember that I told you about? This is the 50% of the fractal. The daily fractal that's there. We just wicked up above it. This was the zone established below. And we traded right into the 50% of the fractal. I said price usually reacts at the 50% of fractal. This is a fractal. Now, this may very well look like the swing high, the swing low, tap into the thing, and then, head up like that. It may look like that, but there are times where you don't get that. You know how many people took this swing high here into this swing low and wanted some OTE entry, whatever it is, and take out Asia from whatever date is Sunday, and then getting smoked right now with their stop loss? So it's just a matter of understanding the concepts, the work involved. We flipped down here. We flipped up above the previous high. So you guys trading up above this high, you trade back into this. We've held our all the way through here. Look at this. This move is insane. This is 111 points. Just, geez, within 20 minutes. What is this? Gotta be something. Gotta be some explanation. because we ain't got that explanation. The is inside trading because you said it's a long shot, and it was definitely a long shot. It went long after, brother. It went long after that. I don't know what that is.
Order filled.
But that went long.
Stop filled.
Gotta be something.
Order filled.
I don't know. But so long for our little range till we But yes, look, let me go to the daily time frame. I don't really go on these daily time frames up here, but Pro Charge had me up here. Pro Charge had me up here on it. I said that this was a fractal from this low, from this high, sorry, here, this low down below here. And I told Pro Charge, I said, now draw out that daily fractal. You see me stab right into the 50%. And then what? That sends us straight up above the previous day's high. While everybody and their mother's still bearish for whatever reason, I'm usually expecting us to grab a high before, running down into something. Usually having that expectation. There is a zone right here. Obviously y'all not holding up stocks. I'll be careful in the zone here, but usually I'm expecting us to grab something and then trade below after we grab it. So this is obviously, stops up above here. Stops Pro Charge. This is obviously stops up above here. This is an imbalance. That's here as well. So usually when we get back to a previous imbalance, that's structures down. Tracement from it, and then we go up to the rest of it. I'm not gonna give anything too far out. Pro Charge and I was talking about this up here. At least I want to see this inside high grab there, but I told y'all I was expecting S&P to get up to 4,600. I told people that from last year too. The biggest say hindsight, nothing. I got charts to prove. But yeah, this is looking pretty healthy here. Looking pretty healthy. So yeah, it's the same stuff over and 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 over. This is all day, every day, same thing all the time. Same old stuff. That we get. This is obviously a higher time frame imbalance. You could expect or essentially get price to range somewhere within. Little hidden S&D formed right after we took out our morning high. Told you sometimes at the top of this, patterns here. Dip back into the imbalance, could end up putting in another high and then trade them. sideways, whatever. That way. It's when I say it's a blessing being on the right side of the it's literally just utilizing the same. I'm on the 5 minute. Yeah, see what I'm saying? A little. When I say it's a blessing being on the right side of the market every day, I mean that. As you guys can see, there's never a day where we think something is happening and it doesn't. We're not trading what we think. Because there's a lot of times where we used our judgment to say something that we thought, and we were way off. Way off. I moved out here, somebody moved my garbage can from where I set it when the garbage truck was coming to get it. They moved it. And I see at 2 a.m. my garbage cans are moved over to some. I'm like, who is moving my garbage can? How dare you come over and touch my garbage can? Who moved my garbage cans? Like I was angry if somebody was moving my garbage cans. Couldn't find out it was the neighbor because the tree, every time the garbage truck picked up the can, because they pick up the can and just dump it in the truck out here. Every time the garbage truck picked up the can, dump it in the truck, it would hit the tree and branches will fall. And I always wonder, why are the branches falling? What are the branches doing? Why are all falling down? So I got a problem that the branches are falling. I'm the problem that the branches are falling from. The neighbor comes to help me out with that. I'm like, who's moving my garbage can? Like I'm upset and angry. My judgment is off because in New York, you got to survive. One of the worst places to live. You got to survive. And it was just somebody extending help. Just offering some type of help. I tell you, New York, growing up in New York was very traumatic. Very traumatic. I'm coming out of that. Got to go to therapy and fix my mindset and all of this. Not everybody's out to get me. I got to chill with that. But our judgment tends to be off sometimes. It definitely tends to be off. And we got to understand that. Yes, there's a possibility that we're wrong about people's intentions, about people around us, about whatever it is that we're doing. Ability to be wrong. So I could think, yes, we're shorting today because Joe Biden fell asleep, or whatever other reason people say for. Oh, maybe FOMC, they're going to raise the interest rates. Maybe the rates are going to rise. Like whatever it is. Is there news later? Maybe the news is going to, like, you don't pick up a bias because something is happening. What do? You just follow structure. That's it. Follow structure. My man Luke just came from came up from deep. But the nose is a long shot, but just don't look at that. Look at that extension. All because we failed from the 30. Look at that. Yo. But that just goes to show you that trading what you see and not what you think. Trading utilizing concepts that we both show and teach here. It's what you should stick to, not what you think you know, not what you feel like can happen. Look at what's actually going on and stick to that. I mean, we got enough area here, even if it's just the beginning, 30%, but we got some, everybody probably, believing that we're going to get up into this, so they could actually just, get up somewhere into here and then extend the market down like that. And for the day, it could look like, something like that. Lunchtime could bring us down into here. Then after they're done with lunch, they could bring us up here. Everybody takes pictures to take us up into there. And then you see us draw back down here to get into whatever previous area we end up being drawdown margin call. Just gotta make their way back up there and through news or whatever. Some between, here. There's a ton of things that could happen, But again, you just trade whatever it is that you see. That's it. So I'm glad that I recorded all of this. Glad that all of it was captured. I'm gonna immediately upload it to YouTube and then release it to y'all. So the end of the recording. Watching this at another time. You weren't here for the sauce, but you're watching this in replay. Just know that I wish you no sleep at night until you put in the hours to get this. All right? Peace out. All right, there we go. Ended the recording. Upload it for y'all. Send it to y'all. It's 12 o'clock now, so I guess that's, I hope you guys, learn something today. A thing or two. Sometimes I go into rambling and all. But Luke took over the second half of the afternoon, the second half of the doing that banger. So, he's been here for a minute. So, I expect that from the people who have been around the teachings for a long period of time. He's one of the foundational students. So is, Dorit Dershawn and Pro Charge, and as well as Gotta Get Jeremy. But this is what understanding this and applying it day in and day out, 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 day in and day out. This is what it does. This is what it does. Soon enough, these little tiny moves you take in, these little things you trading based on, little understandings that you have, soon enough, you'll be able to pull crazy amounts of profit from little tiny areas and not even have to worry about being on the charts. Bang out 3, 4, 5K in profits, and that could be a day. Just taking little tiny moves. 5K is 25 points on 10 contracts. 25 points on 10 contracts. If I'm teaching you how to discipline of 10, of 5, I'm teaching you guys how to pass these funded accounts with size. And when you pass it, and when you go further into profit where you don't have
order filled, order
buffer,
filled,
then you'll be taking these 25, 30-point moves. But if you get into the habit of doing that, it's going to become harder for you to pass things and harder for you to manage. So you're going to be able to do all of that later, 25, 30-point moves, whatever it is, and it doesn't matter about anything trailing behind you or whatever, but you guys how to be able to successfully pass that, how to be able to successfully get across that and actually be able to change your life. But it starts with what? What do you say profitability starts with? It starts with being able to follow instructions. That's it. Nothing else. Nothing else. Just that alone. Starts with being able to follow instructions. That's all it's being able to follow the instructions. Yeah, you're gonna have struggles. Yes, you see people talk about getting in early. They were right, but they were in too early. That's the biggest obstacle that people have with this strategy. The biggest obstacle people have with this strategy is getting in early. Getting in early. They're not wrong. They're just early with it. They're not completely off the mark like we have been with so many other strategies that we've used, and we've lost after loss after loss after loss after loss because we try to force it in one direction. No. The biggest issue that people have with this is being early. And being early can be solved rather than being wrong the entire time you're trying to trade. You're a lot closer being early than being entirely wrong. So you're gonna continue to show up day after day. I'm out here doing this for 3 hours. I'm talking away for 3 hours, barely getting in a sip of anything, talking, chatting away, narrating 3 hours. And that's speeding up your learning, being able to hear what's going on, see it happening, and having the opportunity to get involved that time. That's very important. You know, so it's like having somebody, you know how hard it is taking jump shots and having to go and get the ball. You shooting and the ball go all the way over there to the, you got to run over back to the position that you were taking a jump shot at and to shoot again. And then it goes back over there again. You got to go run and go get hard. And you literally got somebody pass you the ball every time you shoot. I'll catch the rebound. Here's the ball. I'll catch the rebound. Here's the ball. I'll catch the rebound. It's a lot smoother. You work on your shot way more doing that. You're just focusing on how to pick up the ball, flick the wrist, and hit it each and every time. You're in the right direction. You're not shooting at the other opponent. The other opponent, you know, basket back there. You're shooting at their basket. You just taking shots on the side you're supposed to be on. And those reps help you far more than having to do it by yourself. So just show up each and every day, because guess what? I ain't gonna be doing this every day. I'm tired. This is exhausting. I'm counting the amount of days I got left. I'm tired. 2 or 3 hours. I was doing 5 hours when we first started. I'm tired, yo. But you gotta keep going. All you gotta do is show up. You just tasked with showing up. That's it. No. You just told to show up. So, you know, hope you guys learned something. And I'm being in the chat throughout the day, you know, look at questions, stuff like that. And I'll see you guys soon, all right? I'll catch up with y'all. All right, later. Peace out.